Tesla shares are down nearly 40% since Trump took office. And even if Musk cuts his time there, my next guest says the company faces a lot of hurdles. Joining me now is John Murphy. He's BofA's senior autos analyst. John, it's good to see you again. I always think, again, that it's brave when you cut or do anything with the stock into earnings. So I'm curious for your take today now that you've seen all the results.
So, Kelly, thanks for having me. It was a quarter that was a little bit better than people feared. It's why the stock is reacting positively. Elon turning his attention back towards the company, a little bit away from Doge, is also, pretty constructive. The company's miss was really driven by higher SG&A and R&D spending, which is reasonably controllable and has to do with investment in future products and opportunities. So I think a lot of investors viewed that as a reasonably constructive miss, if you will, and an investment in the future.
Interesting. So all of that said, your new price target is 305. We've seen a couple of upgrades, I think, after the numbers last night. In the rate 350, that's out there. What do the numbers say to you is doable for this company?
So, I think when we look at volumes, which I still think are pretty important for the company, they're probably going to be down at about another 1% to 2% this year, and growth will only be reestablished with new products. And I think this is really a key part of the story. And we upgraded the stock to a buy in April of last year, downgraded in January this year, largely because we thought a lot of the hype around the new product was in the stock. But I think the news last night, there was one real sort of negative nugget, at least from my perspective, is that the new low-cost product is going to come out by the middle of this year. But the reality is it's going to be likely more a stripped-down version of the Model Y and Model 3, which could really put those models at risk, and it's really not what we thought was happening. And Elon also talked a lot about not needing to have a lot of new product, and sort of an analogy for Nokia phones versus the iPhone, and the iPhone was something that's had a pretty static form factor over time, and he kind of alluded to not the need to really introduce a lot of new product. And I think that's kind of a real miss relative to what's needed in a consumer retail business.
So in other words, and I don't know if they're still referring to this as the Model 2 as a shorthand or whatever, this compact car, this was going to be one of the newer models, right, for Tesla to bring out in recent years. But you're saying instead of it being kind of a new model, it just looks like a stripped down version of what the company already offers, which could cannibalize its sales of the Y and the 3?
You hit the nail on the head, Kelly. That's really kind of what they were alluding to last night. So, I think that does put the current models at risk. And, our assumption was they were going to have a new low-cost model by the middle of this year, and another model that was in the sort of same vein as the 3 and the Y in the second half of this year. And that sounds like that's put off into next year. The other thing is they're talking about start of production, which doesn't mean ramping significant volume by the middle of this year. So it's kind of a play on words and semantics as to when you're actually hitting the targets that you laid out before.